Welcome back to another episode of Sick Investing with Arya. I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, we are going to be discussing the state of the so-called Robotaxi wars. As of the date of this recording, today is June 11th. Tomorrow, Tesla was supposed to announce, or actually release their newest Robotaxis inside of Austin and get people driving in their Robotaxis without a driver. And then actually about 3 weeks ago, we found out that no, they're not going to be completely unsupervised Robotaxis. They're going to actually be completely supervised, where there's drivers sitting behind computer screens, but simply driving them from a remote location. So there's no driver inside of the actual car, but instead they're driving it from some other location. So interesting. Okay, they're just doing that to start, but then over time they're gonna start, driving it completely driverless, such as like a Waymo today or whatever the case is. And then this morning it got announced that actually Tesla Robotaxis altogether are going to be delayed to a start on June 22nd, so delayed by about 10 days. And then Musk, inside of his tweet on Twitter, he actually said that starting the 28th, the cars are going to be driving themselves to the customers' houses. Again, I don't think this should surprise anyone. Musk has been known for incredibly optimistic timelines when it comes down to any of the things that he says he's going to do. Granted, most of the time he ends up actually completing those things, so it remains to be seen whether or not these deadlines will be pushed back even further as well, or we're finally going to see a completely driverless, unmonitored Tesla vehicle on the roads of Austin by the end of the month. Now, I also have a bunch of different clips that I want to show you guys from this most recent interview that the Uber CEO did about, I think, 5-6 days ago, and there's a lot of great details and really incredible insights that he shares with us. But before we do that, I want to give a quick shout out to finchat.io, which is the sponsor of today's video. They're the greatest stock research platform which investors have available to them. It combines a sleek and modern interface with unparalleled financial data, and of course all of that is done on a beautiful charting interface, allowing fundamental investors to derive insights from. If you're interested in trying it out for free, you could do so using a 2-week free trial, no card required. It's the top link in the description, and you'd be helping out the channel in the process. So I would recommend that, if you're interested in Uber, if you're a shareholder of Uber, you do actually listen to this interview in its entirety. It was a great interview. There's a whole bunch of stuff about cross-platform utilization of, Uber Eats and rides, and then additionally, they have 8 million drivers, and so what could that possibly mean for future job opportunities for, the biggest sort of gig economy job in the world? And so there's a lot of interesting stuff that kind of gets you thinking as an Uber shareholder. But for the scope of today's video, I'm only going to focus in on the portions where he's talking about autonomous vehicles. And so this is the first question the interviewer asked about 4 minutes into the thing, and I'll just play it and then we'll talk about it afterward.
AVs. But I am curious, have you identified where you want to focus? What do you want to free the cash up? Is it about developing deeper relationships with a select number of AV partners? What's the strategy?
So we want to essentially support the AV ecosystem and continue to help that ecosystem develop, and then AVs penetrate into the marketplace. AV, we think, represents a safer way of transportation. Ultimately, we think it'll expand the marketplace as it makes kind of safe transportation in cities available to everybody. So we're big fans of AV. And generally, we're working with multiple partners in the ecosystem. Waymo, for example, in Austin and Atlanta coming up. Wave, Avri, there are probably 18 partnerships that we have in the AV ecosystem, and we want to help these players develop by investing in them in some cases, but really by working with them to bring their product to market. These are technologies that are unbelievably promising, but they've taken billions of dollars to develop and 10 plus years. And it's one of those overnight successes that's kind of taken 20 years of development, but it's finally ready to hit market, and we want to help the ecosystem get there. Separately, we have large stakes in many companies,
yes.
Well over $5 billion, that we think we can take some of those stakes and essentially recycle them into additional investments in the AV ecosystem. So over a period of time, we'll get it right. We've got a ton of free cash flow of the company. So one way or the other, the goal is to build up the AV ecosystem around our network.
Build up the AV ecosystem. You guys have the UI, for example.
And I think what he said at the end there is just probably the most important thing and the most important takeaway that I have from this. He said he wants to build the AV ecosystem around the Uber platform. And that completely makes sense to me. So Dara is the former CEO of Expedia. And I'm sure many of you guys are familiar with what Expedia is. And I think his vision for it is something similar, but not exactly the same in the long term, where Expedia obviously acts as a demand aggregator for all the hotels. And so sure, you have your Hilton and your Marriott and that type of stuff where they have their own websites and they can book customers like you and I. We can book through the Hilton app. We could book through the Marriott website, whatever the case may be. But then additionally, to kind of supplement that, and because, in theory, you can only fill out, call it 70% of rooms. That's a maximum amount of rooms that you can fill out with the demand that's going to the Hilton or Marriott websites. What they will do is they'll partner up with an Expedia. They'll partner up with a Booking.com, and they will list their rooms there. And as a result of that, an additional 20% of their rooms on average start to fill out. So all of a sudden, your utilization of the same hotel is 90% as opposed to the 70%. Sure, you're taking you have a lower gross margin on those incremental rooms that you're listing onto Expedia or Booking.com. It's still more revenue, more profit and all that great stuff, right? So it's still better than having that thing sit empty. So I think the same sort of idea is going to happen with Uber, where I don't think it's going to be a winner takes all market. I don't think it's going to be Tesla, where they're going to do everything from 0 to 100. They're going to do the hardware, which is the cars. They're going to do the software for it, so self-driving. Additionally, they're going to do the fleet management and the cleaning and all that garbage. They're somehow going to figure out the insurance portion of things. And so in the case of one of the cars gets damaged, who's going to pay for that? And then all the other miscellaneous stuff we're not even thinking about. For example, like lost items or the matching algorithms and making sure that the peaks and troughs of demand throughout the day, as highlighted by Uber themselves, it could be like 2-3 times difference. If you're going through rush hour, there's 3 times more demand in metropolitan areas for people trying to get to work than there is in the middle of the day at a random hour, right? So being able to sort out all these different things, it's quite a challenging task, and Uber's been doing it for 15 years. So I would imagine the average AV company, they've dumped billions and billions of R&D into developing their software. Odds are they want to just collect the very high gross margin software revenues. They don't want to deal with the fleet management and the cars and all the other garbage. Tesla's a bit of a different case, but nonetheless, I think they would be smart to pivot the business to simply licensing the FSD and maybe the cars, and then that's about it. Don't worry about the other side of the network, right? So I think long term, the fact that Uber has 170, 180 million monthly active users, that has to have some sort of value. They are in 10,000 different cities. They're highly localized. They know the laws and regulations of every corner of the world, right? So these things are very valuable, and Uber can serve as a sort of go-to-market company for all these different AV companies that are coming online. And by the way, it's not just Waymo, it's not just Tesla. There's a lot of promising companies that are now launching in the UK, that are launching in Dubai. The Chinese companies, they've been doing rides since 2022. Go take a look into it, right? So anyways, we'll move on to the next clip here. So here he specifically gets asked about the competitive dynamics of Uber versus Waymo, and obviously I'm sure many of you guys know, but the two are very closely partnered together. So a lot of Waymo's rides are actually done through the Uber app in cities like Austin. I believe in Austin specifically, they're exclusively through Uber, but in LA and San Francisco, Waymo has their own app, Uber has their own app. So aren't you technically competitors? And so you'll kind of see what I was just talking about with the Expedia example, but listen to how he answers it.
Your relationship with Waymo. We had Sundar last night. Asked him about when he's going to be able to take a Waymo from Mountain View all the way up to San Francisco. We're not quite there yet, but there are genuine concerns about the ways that you are both a partner and a competitor to Waymo. What is the conversation like internally and with your board over how you continue to deepen that, what is a valuable relationship as far as I can tell, but also keep it from becoming something that starts to undermine your business?
Well, the relationship with Waymo, I think the press and to some extent investors love to create drama because what the hell? But the type of relationship that we have with Waymo is very similar, for example, to the type of relationship we'll have with the Starbucks coffee. They're a great partner with Uber Eats, and at the same time, Starbucks wants to have its own app and wants to have interactions directly with the customer, and it isn't an either or, it's an and. So we offer Starbucks on Eats, and they compete with us in some ways with the Starbucks app and with their loyalty program, and that's fine. That's the way business goes. Same thing with Domino's. Domino's 3 years ago wasn't going to work with the platforms, now works with the platforms. And in the same way, in San Francisco, yes, we compete with Waymo to get rides here, but in Austin, Atlanta, we absolutely work with them. And what we're seeing in Austin is, frankly, the launch is going better than we expected. Number one is safety, and obviously Waymo's the best at it. And number two is customer love, and our customers are loving kind of the delight and surprise of getting a Waymo, and they're coming back. So I do think that this is going to be, it's not an either or. We're going to be working together. Waymo is developing its own channels, and at the same time, we can work together very constructively.
I mean, I feel like we kind of covered it in the last segment, but he said it beautifully. It's not an either or, it's an and. So Waymo will have their own app, no problem. They're going to probably do great. They're going to do a huge number of rides on there. But at the same time, there's a good number of customers and people that are just used to defaulting over to the Uber app. Whether it be through like mild switching costs of like they have, my office's address is already in there. My home's address is already in there. My kid's school is in there. Like whatever the case may be, or like they know my favorite orders. Just these like small number of things down to like, I think about like my dad. Like my dad, he struggles with like, finding his way around a new app. You know what I mean? So he knows, he's figured out over the past 5-7 years, he's gotten used to the user interface. Or like even, for example, my mom, she knows where to like go to click the plus button to like add a stop and all this stuff. These are mild switching costs that a huge portion of the population is going to probably stick to the Uber app because they've figured out how to use it and they've used it for so long. It's become the default place to get get a ride inside of their mind, right? It's become the go-to location. The same way, for example, on Amazon is the go-to location to buy something online. Uber has now become the default location for people to hail rides. In most markets, not the US actually, it's become the default location to get food delivered, right? And they're still, competing on that front in many countries, but they own category position in 8 out of the top 10 countries that they're in, right? Namely Canada, Australia, UK, so on and so on, right? And so odds are, again, you'll have the Waymo app as a standalone thing and that'll be there. But then at the same time, a huge number of people, what they're going to want to do is they open up their Uber app, they scroll down, you got Uber X, you have Uber Comfort, Uber Green, Oh, look, it's a Waymo. Sure, I'll do a Waymo. And then also consider that, it's not going to be just Waymos. It's going to probably be electric or AVs, autonomous vehicle. And then you click on that. Sometimes it's a Waymo, sometimes it's an AvRide, sometimes it's Wave, whatever the case may be. It'll probably be some version of what I just explained. Now, this next clip is like 2 minutes long, and frankly, I don't want to bore you guys to death here, but I'll kind of just read you the summary of it that I put it into Gemini and had it summarize it for me. Quick little anecdote, by the way. I put this into ChatGPT, the transcript, and it wasn't able to do it. I put it into Gemini, it worked out perfectly fine. So anyways, take that however you will. But the follow-up question, I think after this one, they ask him, okay, so sure, no problem, Uber, you're going to be insulated from the issues with autonomous vehicles. What's going to happen to the drivers? If we have a future where more than half of the rides that are being done on just, the total market or with autonomous vehicles, eventually there's going to be a point where the drivers are going to be cut out of this equation because it'll be cheaper without them, it's better consumers, whatever. And so he kind of addresses that. He says, and he's talked about this in podcasts dating back like 2.5 years. So this has been something they've been thinking about and working on, just to kind of give you how long-term and how visionary this company is, right? So Dara addresses driver concerns about AVs. He outlines Uber's plans to grow their overall business, ensuring more work for drivers and more significantly introduces new Uber, not Air solutions, AI solutions, where drivers can engage in knowledge work like labeling maps and translating languages. There's a powerful discussion point about the future of gig work and automation's impact on employment. So what they're basically saying is they have 8 million drivers on the platform. So other than having them drive Ubers, what else could we get them to do? What other gig economy sort of work at your own free time things can we get them to do? And in the case of you go to, I just came back from Mexico, and some of these streets are just it's just like a dirt road with shrubs on either side. So there is no asphalt, there's nothing, there's no lines on the street, nothing, right? So as good as satellites are, I'm sure there's a good portion of dirt roads around the world, particularly in third world countries, where it would be probably difficult to map those out and whatnot, right? So they could get them into map labeling and additionally some other work. They're kind of thinking about it in the very early innings of this type of work, but the optionality and the opportunity to get these drivers to do other work is definitely there. So something to think about for the long term for this business. Now, very quickly at the tail end of this video, just to kind of do a brief a fundamental overview of where the company stands today. I frequently get asked about Arya, what do you think of the valuation? Because the stock is up, about 30-ish%, maybe a little bit more. I'm actually curious now, how much is it year to date? So yeah, stock's up about 37% year to date. Obviously, it's done incredibly well. That is way blowing past what the S&P 500 is doing, but is it still a good buy today? And so I'll give you, I never want to deliberately say it's a good buy or not, but I'll give you a sort of idea into how I'm thinking about the valuation and you kind of decide for yourself. So first and foremost, if you're looking at Uber, and actually I'll go on light mode so you guys can better easily see that. If you're looking at Uber today, you're looking at a business that is growing revenues at about 18% over the trailing 12 months, and this is actually accelerated slightly over the past handful of quarters. I think in the most recent quarter they did actually, it was 14% due to some currency headwinds, whatever. It was actually much closer to 18-19% on a constant currency basis. But they're doing in the mid to high teens in terms of revenue growth. At the same time, their operating margins are, I believe, in the high single digits, about 8%. So it's not a particularly high margin business at all. I think they have huge room for margin expansion in the future. Additionally, if there's some scares about that 18% revenue growth is not going to keep up, what you have to keep in mind is if we go down here to the total number of monthly active users on the platform, that in of itself is growing at about 14%. So the monthly active users of Uber that are transacting at least once, that in of itself is growing at about 14%. And then if you bring up the total number of trips that are done on the platform, that's growing at about 19%. So what you have in between here, the 14% and the 19% growth, the delta between those two is higher frequency, which Dara, the CEO, he's talked about that in previous conferences and stuff like that, but not in this one specifically. But actually over on FinChat, we have that KPI as well. I'm able to find it. Here we are. This is the average number of rides that your average Uber customer is doing per month, right? And you can see over the past, call it roughly 3 years or so, this has went from about 5 trips per month on average to about 6 trips per month on average, which doesn't seem like a lot, but then if you got to pay attention to the growth rate here, that is growing at about 5% annually, which kind of explains the gap that I just showed you between the total number of trips and the total monthly active users, right? So what you have is they have multiple different growth levers to be able to pull on to be able to drive that close to 20% revenue growth. There's, a base number of, call it low teens % growth in terms of the number of people coming onto the platform. And then you have this about 5% increase in terms of frequency. The people that have already been on the platform, they end up transacting higher with Uber. They do more rides, more eats, or even in some cases, they do larger basket sizes. So that's, another growth lever, particularly with Uber Eats. And so the net of everything is that you have a business that's growing revenues at about 20%, maybe a little bit less. They're going to grow margins slightly Ideally, over the next handful of years, I expect that 8% operating margin to look closer to like a low teens, maybe closer to like a mid-teens percent in the next, call it 5 years or so. And then additionally, you have a business that is now churning out, if I'm able to pull it up, over the past 12 months, they've done close to $8 billion of free cash flow. And so, this market cap is roughly 180. That means that in theory, they could comfortably be buying back like 3 to 4% of the market cap if they wanted to. They don't have much debt. They have a net cash position, right? So from a balance sheet perspective, they look amazing there as well. And so, you slap that on to the growth rate as well. All of a sudden, 20-ish% revenue growth, maybe a little bit less. With margin expansion, it'll easily be over 20%. And then you slap on a buyback. You're looking at a business that can probably grow earnings per share or free cash flow per share at about 25% plus over the next 3 to 5 years. And so what would you realistically pay for that? This is a very wide moat business. They have the network effect. They have the scale. They're in 10,000 cities. They're entrenched. It's become a verb moat. People say, oh, just Uber there. They have all these great things that's going for the business. What valuation would you realistically pay for that? Ask yourself. Now, some of you might actually know what valuation this business is trading at. If we wanted to bring in just the very basic price to free cash flow, which this is just the inverse of the free cash flow yield if you're not familiar, they're trading at one of the lowest valuations they've traded at over the past handful of years. They're trading at about 23 times price to free cash flow. Now, many of you are going to be quick to point out, but Arya, what about stock-based compensation? And so for that, we're going to use FinChat's custom metrics. I'm going to pull in, this time I'm going to do enterprise value, but EV to free cash flow minus stock-based comp. So this is just simply taking out the stock-based compensation that they do, which is, by the way, a diminishing percentage of the cash flow. So it's not too big of a deal. Still, they traded at about 30 times free cash flow. So that lands you at like 3.3% stock-based comp adjusted free cash flow yield. Quite a mouthful. But I say all this to say, I don't think that's a bad valuation at all. Sure, it's not as cheap as it was back in April or back at the start of the year when it was trading at like that low 20s area. It's definitely not as cheap, and I don't expect it to get that cheap, but it's still not an expensive multiple. I mean, even if you were to have this multiple come down to like 25 times free cash flow in 5 years from now, which again, like not that expensive. I think the S&P 500 trades at about 27-ish times free cash flow. So this is like a market average multiple. Even if it were to come down a little bit, the company is growing so fast that it's going to probably outpace that multiple detraction. You're probably going to still end up with, I would estimate, north of 15% stock returns per year, even if the multiple were to come down dramatically. Again, not financial advice. This is just my own stuff. Full disclaimer, like I'm a huge shareholder in this. It's was the second biggest position, but Google has done exceptionally well recently. So Uber is now third behind my Google position, but it was for a little bit my second biggest holding, and I have probably the most conviction in this business. Like I'm lying. I think I have the most conviction in Amazon, but it's definitely up there, right? Like I wouldn't invest 20% of my capital into it if I didn't believe in the company. My homework runs deep, and I think I'm going to do well with it in the future. For you, I think you got to go do your own due diligence and all that great stuff. Anyways, thank you for watching this video all the way through. If you want to come hang out with me, you can join the Discord server with over 250 members. It's the first or second link in the description. But yeah, we would love to have you over there. And I do more sort of deep dives and longer videos than this, more qualitative approach. I just did one on booking.com where I was going over the moat of that business, which is a very, very impressive business. I previously called it narrow moat. Boy, was I wrong. So feel free to go check that out. There's actually a free trial for it anyways as well. But yeah, thank you for watching. Have a great day.